Hello there. Well, markets remain particularly volatile at the moment, and the reason for that is because the economic outlook remains so uncertain at the moment. And there's one thing that's driving that economic outlook more than anything else, and we all know what it is, and it's energy prices. And I think if you want to illustrate how uncertain the outlook is, it's worth looking at just what's happened to the natural gas prices here in the UK. So the wholesale price that your energy provider will pay to buy the gas on the open market. Over the last 2 years, that price has gone up tenfold. It's gone up 1,000% over that period, which is pretty remarkable. But I think in a way, almost more remarkable is what's happened in the past 3 weeks or so since late August, because the price is pretty much halved over that period, having over the 3 months before that gone up kind of 5 times. So incredibly volatile, being moved around all over the place, partly by speculation, I have to say. But of course, what happens to that price or happens to energy prices in general, has a big impact on what happens to what happens in the economy, the economic outlook, the outlook for inflation, and therefore the outlook for interest rates. It's all being driven by energy prices. And of course, as we all know, those prices are being driven by geopolitics, essentially. Prices went up because Russia has been cutting supply, and now Nord Stream has been completely turned off. Prices have gone down because governments in the West, including our own government, are intervening to try and cap the price in some way, shape or form. So the government, of course, here has made an intervention, and that's a positive. It will boost the UK economy. I think had they not done so, I think we would definitely have fallen into recession. Now there's a chance we might avoid it, but if we do go into recession, it'll probably be certainly less steep than it would have been in the past. Or would have been had they not done that. But the point is, it's such an uncertain outlook being driven by geopolitics, and frankly these are things that we just cannot predict, and that will drive whether the market goes up or down in the short term more than anything else. But I don't think we need to worry too much about what's happening in the short term. Yes, we could take things into account, but when we look at the long-term potential return for various different asset classes now, we are really optimistic about the future. So ignore the noise of geopolitics, inflation, all those sort of things in the short term. If we just look at the valuations of the markets that have previously given you a really good indication of what returns will be over the long term, they look pretty decent. Take a UK gilt. If you lend your money to the UK government for 10 years, you're going to get somewhere around 3% a year. And that's basically guaranteed. Now the price over that 10-year might go up or down, it might be volatile. But if you buy a bond now, hold it to maturity in 10 years' time, you're guaranteed a 3% return. It's not fantastic, but if we compare that to a year ago when the return, the yield was closer to 0.75% or something like that, it has gone up dramatically. The potential return has gone up dramatically. If you want to take a bit more risk than that and put your money in a corporate bond, similar approach, but you're lending money to a company rather than a government, you're taking a bit more risk, but you'll get a bit of extra return. You can now get a yield of over 5% from a relatively safe, secure company by buying one of their corporate bonds. Again, a year ago that was about 1.75%. So it looks pretty decent value. And then if you want to take a bit more risk and go into the equity market, there are plenty of parts of the equity market where we can see a price earnings ratio of 10 times earnings, even in some cases single digit price earnings ratios, which is historically pretty cheap. And when we've seen that in the past, over the following period you've had some pretty good returns. So if we just take a step back and say, well, we can't predict what's going to happen over the short term, but over the long term markets look pretty decent value, and we think those kind of objectives above inflation over the long term can be achieved. So we've got a really positive long-term outlook, and we just have to hold our hands up and go, in the short term we don't know. It's so uncertain and being driven by geopolitics. So hopefully you found that helpful, and we'll see you again next month. Thanks.